The following is an update and technical analysis on the U.S. equity markets, starting off with the NASDAQ 100, S&P 500, and then ultimately the Russell 2000 futures based upon the daily round. And I believe we've reached a critical juncture where I called a breakdown. I called the breakdown sell signal backtest here, and the entirety of that trade was good for hitting my last and final third target there, good for a 5.23% crash at the downside, slicing right through T1, which was 14,974, then ultimately testing and undercutting the 618 fibs retracement, and then the 14,558 price support here, where we additionally had whipsaw-like reaction, false bear traps, ended up having a steep counter trend rally, only to retest, re-challenge, have an additional wick-like reaction, false bear trap, ended up backtesting it really to the button here, and it was off to the races right up on Friday on a big green candle close up above, where there was unusual market activity across the board, where market makers seemed to have been tipped off on Friday, just as a ton of funds flowed into the market after the initial drop at the open and just continued to do so, where it appears they anticipated that war would act as a significant stimulus for treasuries in the bond market, considered a safe haven and ultimately stabilizing markets. And it's been a heck of a snapback and or counter trend rally, ultimately recovering the 50-day moving average. And here we are retesting the primary downtrend line off the July reactionary highs, and just a major price resistance level correlated with the 786 fibs retracement, called 15,240 price resistance, and the 15,281.60 price resistance. Call it a triple transitioning point, offering a great risk reward ratio move to the downside, where you have the moving average convergences retesting the zero line threshold as of now off of a bullish crossover. And then ultimately the oscillator testing its zero line threshold as well. We have the stochastics 1033 technical momentum indicator churning above the 85 threshold. So very prominent bullish sign there on the stochastics 1033, whereas bull traders, long traders, they want to see tomorrow, if not the next following day, off the CPI catalyst with a solid daily candle close, green candle close above this key pivotal inflection point, just destroying a bunch of shorts to cover their positions and or destruct any bear traders. Run for the exits there on a potential backtest, retest, rechallenge the 15,718 price resistance, and then ultimately the 1 fibs retracement 15,920 and the 16,002, again highly correlated with the 1 fibs retracement, and then ultimately the most monumental transitioning multi-year price resistance off the primary downtrend line off the November all-time reactionary highs, and I believe would offer the most valuable risk reward ratio short trade setup on a prolonged move to the downside if and when we go on to retest that key pivotal inflection point. As of now, scaling in short here could offer a great risk reward ratio on a prolonged move to the downside. If not, then being stopped out up above, setting some stops above, and then ultimately waiting for that big major primary downtrend line, even larger resistance up above if and when we go on to retest that critical juncture. Whereas again, bull traders, long traders, they want to see a solid breakout above, go on to rechallenge this key inflection point and pop that level, put in an additional green candle close, solid close right up above, re-challenging the 16,002 price resistance, and then ultimately gunning for all-time highs off of 2021, and then ultimately breaking those levels with no resistance up above. Taking you to the US 500 futures based upon the daily interval, and I've added a new primary reactionary uptrend line, significant price support level here where it was defended heavily, coming short to retest the 236 fibs retracement, and then the benefit of a doubt primary uptrend line that I had here based upon last year, multi-year 2022 October reactionary lows there. So we have now confirmed two primary uptrend lines correlated with the 200-day moving average, which was defended heavily right across that key inflection point. Again, off this primary reactionary uptrend line, we ended up putting a nice clean bearish rising wedge pattern, broke down, had that nice clean sell signal. We had this primary reactionary uptrend line, and I issued a sell signal once we broke down below it, offering a great risk reward ratio breakdown sell signal move to the downside, and that was geared. Retesting the 200-day moving average was good for a 5.3 crash percent move to the downside, and then ultimately reflecting, taking out this primary slanted or downtrend line here on Friday with a big move of just huge funds moving in, backtesting the 382 fibs retracement, call it 42.64 price support, and it was off to the races since. And here we are going on to retest the 618 fibs retracement, call it 43.96 price resistance, ultimately correlated with the 100-day moving average resistance up above and the 50-day moving average. So again, you have a triple line transitioning point resistance that needs to be defended heavily by short sellers and or bear traders, offering a great risk reward ratio move to the downside once again. And then ultimately bull traders, long traders, they want to take that level out. They pop that level and go on to retest again, which really correlates with the NASDAQ 100, is this primary reactionary downtrend line once again off the July reactionary highs here. And that would be the ultimate test for any short sellers and or bear traders. If we take this level out, pop that level, CPI catalyst just moves to the downside. The inflation trade goes away, spurring health right back into equities on a prolonged retest of that primary reactionary downtrend line and the 44.5 price resistance up above. Call it a dual line of price resistance, and that is a multi reactionary high and low, significant price resistance level that has been correlated really amongst the entire year there to go on to retest a dual line of transitioning resistance points for a great short trade setup move to the downside, whereas you have already a bullish crossover here in the moving average convergence and just shy of retesting its zero line threshold, as well as the oscillator. So lagging behind the NASDAQ 100 there. And it will be a critical juncture, especially heavily weighted within the technology sector, whereas oil is starting to drag down part of the indice there in the S&P 500 futures. Taking you to the Russell 2000 futures based upon the daily, and here we are. We need a back testing. I had mentioned how great the formation of this head and shoulder classic looking top was forming, and we just really to the button. That's exactly what we got. Classic head and shoulder, put in a nice clean divergent high, had negative and bearish divergences constructed amongst all four technical momentum indicators, and it was a sell-off sense, had a steep counter trend rally in the right shoulder there, where I had continued to hype up that the neckline of the 236 fibs retracement and the 1819 price support correlated with a primary uptrend line, a benefit of down. We ended up backtesting that really to the button there, offering a great risk reward breakdown sell signal, risk reward ratio to the downside, and that was good for a 7.7% crash in the index. And we ended up, I've added the 1703 price support and additionally the 1726 price support as well. And again, these are just new price support levels, 1650 to engage in for any active and or day traders. And here we are. We ended up having a nice bullish crossover here in the moving average convergence. I've added a new minor primary reactionary downtrend line here, which will more than likely correlate with the 1819 price resistance and the 236 fibs retracement once again. And I believe that would offer the more additional great value risk reward ratio short trade setup on a move to the downside if and when we go on to retest that, ultimately retesting some new key levels. The first target could hone in on that 1760 price level, and then ultimately down to retest the 1726 and the 1703 price support. We're bull traders, long traders, they want to see out this level completely taken out with a green solid candle close up above on a prolonged rally, retesting the primary reactionary uptrend line that was broken, and then ultimately the 1899 price resistance up above.